So, where do we go with the euro this week? It's Saturday now, and if you'll have seen my last video, you would have seen how we profited off this rally prior to Jerome Powell speaking at Jackson Hole. And the market went up dramatically before he spoke, and the moment he spoke, the market crashed back down again. And luckily, we managed to get profits at the top. Now, what's going to happen in the coming week, I don't know. It's interesting because what happened was the S&P and the Nasdaq carried on dropping below this sort of level if you compare it to what happened to the euro. Where the euro stopped here, the S&P and the Nasdaq continued on lower. And it's interesting that the euro, this is a 15-minute chart, stopped at this trend line. Even though we're below parity at 0.9960 or 70, we didn't manage to break beneath that trend line, and certainly not below the red line that I highlighted in the previous videos. So basically, we're back where we started before he started speaking, but we're not lower like the stock markets. Now, if we have a look at the hour chart, we can start to get a better picture of the bigger view of things. And let's just have a look at the hour chart. So on the hour chart, you can see the same sort of picture. There's the red line, the support line, the critical support line, and here's the trend line, and we managed to hold above the trend line and the red line. You can see the trend line we held above here for 4 hours, and during that 4-hour period, which is what I was talking about earlier, the Nasdaq and the S&P continued to drop and actually closed off the day on Friday right at the lows, having dropped around about 4%. The euro, however, managed to stay afloat, barely, above the 100-period moving average on the hour chart. So that's a 100-hour moving average, above this trend line and above the red line. Now let's have a look at the day chart. So the day chart looks a bit like this. Well, exactly like this, in fact. So there's the red line I'm talking about, the second red line, which is the previous low of this retracement down to 99.50 odd, 50 or 48, and we're, oh, I've just lost my charts. Right, so we're back again, and we're just holding above that red line, and the trend line is just running up and underneath these lows here, which should appear on my chart shortly, but the internet's just messing me around, as it has been for the last week or so. Now, what's interesting is this series of 4 days in terms of the candle shapes. We get a sort of a spinning top almost doji, then we get a dragonfly doji, then we get an inverse hammer. There comes the trend line. Inverse hammer sort of candle. Not quite an inverse hammer, but thereabouts. And then Friday's is very similar. But notice Friday's candle has a higher high and an equal low, but also very tiny body, and something approaching an inverse hammer type candle. So, strategy for going into Monday is I'm going to carry on buying the euro. Now, that sounds like it's very counterintuitive, looks counterintuitive, just doesn't look right on the charts. And I understand if you are hesitant about this, and it is kind of risky because of the way the price reversed on Friday. But the candle patterns seem to indicate that we've got some bottoming going on here. We're able to get in on this type of candle with a very low risk, and we'll only be risking a very small portion of the 110 or so pips that we made on Friday in this rally. So the price is now currently 99.60, 65 thereabouts, and I'll be entering a trade in there at that price, and I'm going to put 2 lots on, so a standard size position. My first lot will have a stop loss directly beneath this red line, and that price will be at, that stop loss will be at 99.40 or so. So it'll be about a 25 or 30 pip stop loss. And I'll take the first position off there if it fails. And I'll take the second position out on a break beneath this previous low and beneath this trend line. So I might as well go for the previous low because we might just get a spike back down to there. in the early part of the week, and that will be at 90. Well, that's around about 0.99, so I'll put the stop loss at 98.75. So first stop loss down here, beneath this red line, second stop beneath this previous low, which will also be below the trend line. My target back up to 1.01 really, and then the second target will be 1.0350. So that's my strategy for the coming week. And what's cool about it is I'll just be risking some of what I made on Friday, so I've got a bit of a buffer there, and it's still worth a go. And I know it looks to most people like, for love of money, we're in a downtrend and it's going to break lower. I'm not too sure about it. I think we might have a strange looking but realistic chance of this price rallying from the open or thereabouts and moving up to 1.01 and then back up to 1.0350. Good luck. Enjoy your trading during the week. Let's see how it goes.